From the Huffington Post, two leading critics of the financial industry are calling on the FDIC to put some of the nation's biggest banks into receivership, starting with Bank of America. They charge that the ongoing foreclosure fraud epidemic is the work of precisely the same unrepentant bank officers whose fraudulent mortgage schemes crashed the financial system in the first place. William Black, a former regulator and white-collar crime expert who cracked down on massive fraud during the savings and loan scandals of the 1980s, and his fellow economics professor at the University of Missouri-Kansas City, L. Randall Wray, write in the Huffington Post that it's time to foreclose on the foreclosure fraudsters. They write, quote, "The lenders, officers, and professionals that directed, participated in, and profited from the fraudulent loans and securities should be prevented from causing further damage to the victims of their frauds through fraudulent foreclosures." They argue that far from being a coincidence, massive foreclosure fraud, quote, "is the necessary outcome of the epidemic of mortgage fraud that began early this decade." The reason for that? The banks that are foreclosing on fraudulently originated mortgages frequently cannot produce legitimate documents. Now, only fraud will let them take the homes. Many of the required documents do not exist, and those that do exist would provide proof of the fraud that was involved in loan origination, securitization, and marketing. This, in turn, would allow investors to force the banks to buy back the fraudulent securities. In other words, to keep the investors at bay, the foreclosing banks must manufacture fake documents. Foreclosure fraud is the only thing standing between the banks and Armageddon. They say the only solution now is new management, starting with Bank of America. For its part, Bank of America has announced it will end its freeze on foreclosures this week, much earlier than expected.